Hey everyone, welcome back to another episode on the Invest channel. Today we're going to talk about Nebius Q4 earnings. So I think I want to go over their previous earnings, talk about some guidance, talk about what I'm expecting the call and what I'm listening for. I will be live tomorrow morning at 7 a.m. Eastern, 6 a.m. my time, so it will be early for me. But I will be live tomorrow morning going over their earnings. But I wanted to kind of hop in here and kind of record a video before the earnings tomorrow. Again, go over the previous earnings, kind of give you that full picture of the past 2 quarters, and also what I'm expecting to hear on the call. Let's hop into it. So, if I go ahead and hop into their Q2 highlights. So this is from 6 months ago in August. I wanted to just kind of go through so you guys can see what's transpiring and see basically the guidance raises as we've seen. So in Q2, they forecasted 900 million to 1.1 billion ARR. I believe in Q1 they actually raised it from 700 to 900 million to this 900 to 1.1 billion. Um, Core AI infrastructure business had positive adjusted EBITDA, which is great when that happened. Group revenue. They talked about cash, their capex they're going to build out, and they talked about capacity expansion. So they have a bunch of data centers, as we know. They have Iceland, Finland, France, Israel, New Jersey, Kansas City, and this was in Q2. And so they kind of talked about their plan of 220 megawatts of connected power and over a gigawatt of contracted power for full year 2026. So this is what came out in August, and we see obviously they had their partnership with Shopify and Cloudflare. And again, this kind of goes over more of the general stuff, but just wanted to give you an idea of Q2. Now here's Q3, and so this is where we probably saw the big, massive 7 to 9 billion ARR. Everyone went crazy. They also, you can see here, previously raised that contracted power from 1 gigawatt to 2.5 gigawatts, which is insane. They also raised, or they didn't raise, but they showed their guidance for 2026 of 800 megawatts to 1 gigawatt of connected power versus the 220 in 2025. They again talked about they sold at capacity. They had a 19% adjusted EBITDA margin. Group revenue again 355% year over year. 4.5 billion of funding secured, and in that quarter of Q3 quarter, which is the next quarter by the way, they secured Microsoft and Meta. So you guys got to keep in mind too, like this was literally 3 months ago, 4 months ago, and so crazy time for them, but awesome to see. They also released Token Factory, their AI cloud Aether, and again they kind of go through their stuff here. So as you guys can see, companies guiding like crazy, but the market doesn't believe it, right? I mean, I think we can kind of reasonably assume that the market doesn't believe it. I mean, the fact that they're guiding for 7 to 9 billion and the stock price is still, I mean, I think it's under what it was when it reported for Q3. And so the market doesn't believe it. I think we all also in a bear sentiment, but I do think that the market doesn't trust them or believe them. Um, and again, I'm going to show MVC or Manuel's Substack because I think he does great stuff and writes great stuff. So please follow him on Twitter, MVC Investing. Subscribe to his Substack, all the above. He's definitely one of the best analysts in the Nebius community. But again, here I just wanted to go over their analyst estimates and any commentary. So analyst estimates is Q4 revenue of 241 million, adjusted EBITDA of 40 million, 2026 revenue of 3.5 billion, and 2026 capex of 10.5 billion. The company guided for 2025 revenue of 555 million, their year-end ARR of 900 million to 1.1 billion, and their year-end ARR of 7 to 9 billion for 2026. And again, this is what I just showed you. Again, that's right here, this connected versus contracted power. That's all kind of what I already showed you guys. But again, he kind of talks a little bit about how there could be a miss, and I actually do kind of agree with his I guess the argument here is that there could be a miss because analysts don't know how to guide for this company. So he said analysts Q4 revenue estimates imply 548 million for full year 2025, which I believe may be too ambitious. In November, Nebius guided for 500 to 550 million. So keep in mind they guided for 500 to 550 million. And at that point, management already had good visibility, which is a great point. This might be similar to what happened last year. Nebius missed revenue estimates despite being completely sold out. Again, he kind of just basically says they don't know how to analyze this business. It could also be that management set this guidance to over-deliver, but my reasoning comes from the decision in Q3 to narrow the previous range. So previously, it was 450 to 630 million, and they narrowed it, which means they have a better understanding of what it's going to be in, and gave the 500 to 550 million. And so that 548 million number is probably not going to be hit. It's probably be closer to 530. But again, you're not buying this name for the revenue beats and guides, right? You're buying this company for in my opinion, the tone and how they feel guiding forward, right? I mean, that's why you're buying the name is that massive 7 to 9 billion ARR number. He also disagrees on capex. He says on capex, I once again disagree with analysts. In Q4 alone, Nebius guided for 3 billion. Expansion plans for 2026 are more aggressive, so I wouldn't be surprised to see guidance above the current $10.6 billion estimate. Ultimately, it likely would depend on the mix between co-locations and company-owned data centers. The market may not like higher capex, which I 100% agree with him here, but it's just cost of scaling. 100% agree, and I think that's a great point. Now, the next piece is the capacity, and feel free to give this more of a read. I'm going to give more of my take, but essentially, he kind of talks about the 7 operational data centers, and I think what really the market cares about, and what really the markets wants to hear, what I want to hear, is more of their plans moving forward. So they've guided for that 7 to 9 billion, but I think the market needs to see a clear roadmap of how they're actually going to get there because I don't think the market believes them. The next piece too, I think is important for me is just tonality and how they feel about the business. Or do they come on? Are they are they still confident like they were the past few quarters? Are they coming in saying, "Yep, we're going to reiterate our 7 to 9 billion of ARR"? Or do they come in and say, "Oh, we're going to do 7 to 7.5 billion," and then they narrow it down? We don't know, obviously, but I think guidance is really important when it comes to the roadmap for their contracted power, how they're going to get to that 2.5 gigawatts. Um, as well as just their guidance for ARR. Now, I do think in terms of their 900 to 1.1 billion, they'll come in line with that, in my opinion, in terms of ARR guidance. I think they'll probably do 1.1 billion, somewhere in that range. I don't think they're going to beat it like people are suggesting. But I am really curious, and I really, hope they come in and reiterate that 2026 ARR guide, or else we're going to go down immensely, in my opinion. Even though I think the company is still extremely undervalued. Now, the next thing, and obviously I kind of talked about this yesterday, but I really want to hear on the call a lot about the Tavili acquisition. And someone, I forget who it was, I was in DMs with them talking about Nebius, and clearly they have shifted their mind or shifted their value prop. We've always known they wanted to be full stack, but they've kind of just continued doing that. So they came out with their AI Cloud Aether, I think in August or September of last year. Same with their token factory, they came out with September, October in that same range, and now they acquired Tavili. And so they're trying to be in every level of the pipeline of the full stack layer. And so I want to hear their commentary on A, do they feel like they're missing anything? Do they feel like is there any part of the full process that they're missing? So again, now they have the agentic search, they have the grounded reasoning with their token factory, they obviously have the inference compute. Is there another part of the layer that they feel like is missing or they need more of? And so that'll give us hints of, do they feel like they're in a place where they're going to keep acquiring or come out with more products? Or if they're in a place where no, they actually feel, we're fully confident in our entire product suite and we're good to go moving forward. Um, clearly, I think they're obviously trying to think about that. And so I really want to hear their thoughts on obviously the acquisition, the more the merrier. We don't know what they're doing for revenue guidance or what they're doing for ARR guidance. I really would want to hear stuff there. I don't think they'll comment on it, but I think it'd be cool to hear, as well as just their overall thoughts on the full stack suite and how they're moving forward. Because clearly they did this for a reason, and you can kind of tell their shift is obviously they want to give that inference compute, but they obviously want to have that full stack and have the other revenue stream. And so I really want to hear commentary on that. But yeah, overall, guys, something to keep in mind too, and just to be wary on is we're in a market where I've looked today, and every single earnings, basically, essentially every earnings that's been good, the stock's just down 10%, 15%, 20%. A great case would be, let's take a look at Shopify. So Shopify today, now I don't know their exact metrics. I just know they beat. They're growing 30% year over year. They beat both estimates. And the stock was up 13% pre-market. So the market liked the pre-market. And then the second the market opened, it sold down all the way down 13%. So a 25% move in a day off of great earnings. Another one, I think, just reported this afternoon. AppLovin. They're growing like 60, 70% year over year. I mean, that shot down almost 10%, still down 6% after hours. And so we're just in a market, guys, where honestly, it's going to probably sell off tomorrow. Like, if we're just being brutally honest, no matter, unless they come in and they go, we're guiding for 10 plus billion of ARR, we're in talks with, Amazon, like they come in and just hype the crowd about it, then maybe. But even then, I just don't think we're going to have a big pop like people expect. I'm personally expecting a sell-off. Hopefully, I'm wrong. Hopefully, I'm the contrary. But yeah, I just as an investor, I just don't think that you're going to go into this and make a 30% in a day. And also, as an investor in general, like you're not buying a stock to make that quick pump. You're making it over the long term. And so, if it does drop 20%, look at it as an opportunity, right? Not financial advice, but look at it as an opportunity as a company that is $20 billion and going to be doing 8 billion in revenue or 7 billion in revenue in 2027. Um, with mid-term guide of 20% EBIT margins. Um, so again, like just wanted to be wary and call that out because I do think it's important. Yeah, I'm pumped. Again, like I said, I'll be live tomorrow. I just wanted to make a quick video kind of talking about it um, and just get across some ideas and thoughts. Obviously, tomorrow I'll be talking for probably a couple hours. We'll go over earnings and hope to see you guys there. Again, appreciate your guys' support. It's been super fun doing this, and I will see you guys tomorrow morning.